And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the markets. A bit of a shakeup going on and lots to review. So let's just get started. Take a look at the agenda. Of course, we will take a really close look at the broader markets. There are certain areas of support versus resistance, and you are going to want to be aware of them as we enter a new week, full week next week. We're going to take a deep dive into those leadership areas that had led us out of the bear market, see how they closed for the week, and also stocks that are on my radar. These are names that were leadership names pulled back. They are starting to show constructive formations, and then also names that have held up despite this pretty sharp sell-off in some of these leadership names. Those names that do hold up will tend to be your leadership names once the market pressures are over. So I'm going to share a host of names there, and then making the case for high yield. In my screening this week, I did come across a number of stocks that offer very healthy yields, and their charts are looking quite constructive. So for those of you that want to broaden out your diversification, buffer some of those high growth names, we're going to review that. And that also taking a look at some of these turnaround candidates. These are going to be stocks that are newer to the party, so to speak. They have not been participating, but they are turning constructive. Always like to take a look at some of the news items. I'm going to begin by sharing last Friday's news, just to give you a sense of the difference. We did see tech get hit again, but the purchasing manufacturing report was up, factory orders were up, unemployment fell, weekly jobless claims came in. A whole new picture this week. Let's take a look at some of the highlighting news headline items for this week. We did see consumer credit pick up, and that was not entirely unexpected. Potentially good down the road for consumer discretionary and spending. Also, but we did see July job openings increase. That was a really mixed report because while openings increased, there was not a pickup in hiring. So not the best of news there. We did see jobless claims come in worse than expected, not by a mile, but certainly not going in the right direction. Producer and consumer price indexes rose more than expected, and particularly that consumer price index up 1.3%. It's just telling us that manufacturers, consumer goods providers are passing on those increased raw goods costs that they're bearing onto consumers, but it's not anything of concern just yet. It's very much noted, but not impacting inflation just yet. So there's your backdrop. Let's go ahead and take a look at the markets. We, of course, want to start with the S&P 500. I'm going to take us to a daily price chart here. And what you can see is this bumpiness and this pullback from that peak in price last Wednesday. We are really just bouncing around. The S&P 500 was down 2.5% this week, but for my work, I am going to pay attention to these simple moving averages. And forever, we were paying attention to this nice upward trending 10-day markets continuing to find support as we charged to new highs. But now the big moving average that you'll want to be on top of is this red 50-day simple moving average. So when we get these pullbacks, we need to and have to find support at this 50-day. That is very critical. A break below that would be very ominous, as your next area of really big true support is way down at this blue 200-day simple moving average. So a significant drop from there, about 10%. But in the near term, let's take a look, because we did briefly undercut that 50-day today. However, the markets did close not only above it, but in the upper portion of its trading range for the day. Now that is constructive. Let's take a look at our outside momentum indicators, and we can see that the RSI remains negative, but it's right at that 45. It's now heading back upward. Just going to see if I can move that arrow a bit so we can get a better view here. And then also, we can also take a look if I can just move that a little. Yeah, so we're trending a little bit sideways there. Stochastics are negative. They're down below that 50. This is another momentum indicator. The good news is it is starting to turn. And when we have a move in the stochastics down below that 20 into this oversold position, an eventual reversal of that can be very constructive. You'd have to go back certainly to this March and then April period before you to see the stochastics down below that 20. So a nice move out of that oversold can be quite constructive and powerful. So of course we like that concept, and it is looking very interesting. I did want to take a quick look at the NASDAQ. That has been the leadership area. I mentioned that we would take a very close peek at that NASDAQ. Not quite as constructive, because let's take a look at the close today, and we can just see really how much volatility and bouncing around is taking a place this week. For those of you active in this markets, I'm sure you've had a very frustrating week. We've had head fakes and pullbacks and everything else. But let's again focus in on this red 50-day simple moving average. The level there right now is 10,936, and we did close at 10,853. So unfortunately, we did close the week below. We were able to recover from a Monday close below that 50. So I'm going to have to do a lot more in the way of screening. For those of you with the MEM Edge report that will be delivered on Sunday, you'll get a lot more in the way of insight. We're going to look at other time frames and so forth. But for now, on the NASDAQ, not constructive looking. RSI is negative. We are getting a similar potential turn on the stochastics. I like to use stochastics because they are faster moving for these indexes. So of course we will keep an eye on that, but overall mixed with a negative bias. So that's the broader markets. Let's go ahead and drill down and take a look at the action underneath the markets. What was going on behind the scenes? This is that candle glance 2-month daily chart of the underlying sectors in the S&P 500, and I've gone ahead, added that RSI, that relative strength indicator, and sorted it descending. And for those of you that have been watching my show each week, you'll know that for many months into that Wednesday peak in price in the broader markets, we had clear-cut leadership. We had consumer discretionaries up there in the forefront, technology and communication services XLC. And take a look, a very different view this week. Materials up here in the forefront. A lot of that, we did see a nice pickup in gold and other material stocks. Industrials, they're up here in the forefront. They were negative, just down a bit, but certainly clearly outperformed the broader markets. Hopefully we'll have time and get into actually my next slide. I will get into where that strength was here. Staples, we're seeing a nice hold up there, although it was down 1.4%, better than the broader markets. But let's go ahead down to technology. This is an area that has really, for those of you that have participated in the rally in technology, you'll be feeling a little bit of the pain. But I did want to go ahead and put the full stochastics up and share with you this view of the tech. While the NASDAQ did close the week below, the tech sector was able to rally after undercutting that 50-day to close the week above it. Now, we do still have an RSI that is negative, and stochastics certainly still have work to do, but encouraged buy that close above that critical key simple moving average. Let's go ahead and get back, take a look at some of these other sectors to get a sense of really where the strength or weakness is. XLC, very similar to XLK. So we are going to, of course, from my work, I do traffic in these higher growth names, faster moving. So I'm going to keep a close eye on technology and communication services. Discretionary stocks really held in quite well. And some of these names that are on my radar are in this area. The consumer is still alive and well. So we're going to share some names there. Let's go ahead and drill down just a little bit further where we can go ahead and take a look. In addition to those sectors, I populate this with the semiconductors, also with software stocks, leading areas in tech. We have gold in here and so forth. So again, strength over here in the upper left quartile to weakness. So transports, this is that one area I mentioned to you within industrials. It was all about the transportation stocks this week. Take a look at how well that is holding up. That's generally bullish for the markets because it's indicating purchased goods do need to be transported. So holding in quite well. Rail stocks, they came out with a good metric this week. Rail traffic was up. So a couple of bullish activities taking place there. Unfortunately, volatility did pick up, but take a look, it diminished throughout the week. So we're getting some signals, again, really a little bit early because we are still at a 27 level on the VIX, but we are getting a sense of potential stabilization. So next week will be very, very telling. And we can see, we talked about gold stocks up here in the forefront. And then as we move forward, taking a look at some of these former leadership areas. This is taking us into that Wednesday peak in price, and we can see that the semiconductor stocks bouncing around in line with the markets. The RSI negative, MACD is positive, but heading downward. So lots of bumpiness there. We can take a quick look here at software as well, another former super leadership area that even had more explosive gains to the upside and just a lot of wobbly bouncing around uncertainty in that area, with some names still holding up quite well. And those, as I stated, will be your leadership names once the market pressures are lifted. So I'm going to take a brief break. When we get back here, again, I will share with you those stocks on my radar and some of those higher yielding names. So we will be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. So again, here I am going to go ahead and focus on those stocks that had been big leadership names, pulled back with the markets, and give you a sense of what I'm on the prowl for to, well, first of all, I would like to see more bullish action in the broader markets, but on a stock-by-stock basis, this is Home Depot, big winner. They just reported here explosive record sales as people continue to improve their homes. And so we can see it pulled back with the markets, found support at this upward trending 50-day simple moving average. So of interest to me here is if Home Depot can break back above the green and purple, That would be your shorter term 10 and 21-day simple moving average with a positive RSI, and ideally on volume. Of course, I want it to be perfect, but this MACD is still hanging up here in positive territory. Let's take a look at some other big winners that held in relatively well, but actually this one did pull back quite a bit. This is Domino's, DPZ, a big winner. A lot of people ordering takeout. They've done really well with digital sales, but this is another one where I would like to see a break above that shorter term simple moving average. RSI and MACD not quite positive. Actually, here, let's take a look at a stock that reported their earnings this week. This is Restoration Hardware, very high-end furniture and home goods provider. And take a look. They really reported super strong numbers, gapped up here. This is yesterday, and super, super high volume. The good news is it retained most of that gap up. It was down 1% today, and it does appear poised for further upside. Management also, while they did not guide specifically as far as reported numbers going forward, they did speak very bullishly as to their current growth prospects. So keep this one on your radar. It does look poised for further upside. Let's take a look at another company. They did not report, but they did guide higher. This is Crocs. You may be familiar with their shoes, alligator type shoes. They've really branched out. They've done super well with their digital marketing, and the pre-announcement pushed this stock out of a very long, nice 1-month base on big volume. Take a look. The RSI did not get negative. It remained positive, and we have a positive MACD as well. So keep that one on your radar. Another name that's in an entirely different area. This is Thermo Fisher, TMO. Lots of analyst upgrades, price targets as high as $485. It's trading at $430 right now. They are involved in vaccine manufacturing and coronavirus related products. And we can see it pulled back to this upward trending 50-day, and then this week, while other stocks struggled, it broke back above those shorter term simple moving averages into bullish territory with a positive RSI. Let's take a look at another well-known company. I didn't mention this, but the Dow Jones was the winner, for lack of a better word. It was down 1.7%, so down the least. This is a heavyweight name within the Dow, and this is McDonald's. We're looking at a daily price chart, really just held in remarkably well, pulled back very briefly to this 21-day, and appears to be in a nice confirmed uptrend, positive MACD and RSI. The company did announce that they are partnering with a very famous musical artist, Travis Scott. That got the attention and got the stock going. And they're also going to be looking and partnering with a firm that will be providing reusable hot beverage cups. So that seemed to be good news as well. Let's take a look at another stock. This is Unilever. And take a look at this gap up. This stock gapped up, broke out of, or is poised to break out of a nice 1-month base. Again, analyst upgrades. They're involved in a lot of really growth areas given the current pandemic, cleaning products, hygiene products, and then also food. So analysts are upgrading. Take a look at this nice MACD downtrend reversal, black line up through the red. RSI remained positive. The company offers a 2.5% yield, so that's a nice bonus as well. And then we can see AVGO is Broadcom. Stock's trading at about 360. A lot of price target upside to this, as high as 415. They just came out with strong numbers last week. So I really like this stock, waiting for the NASDAQ to turn positive. So I can get super bullish on the name. And then one last one is Philip Morris, PM. They did raise their dividend. It's currently at 6%, so they raised it even above that, as well as their earnings estimates. So those are stocks for your radar. Let's go ahead and move on, because I did mention to you that Well, you know what? Before I get into the dividend high yield, what I did want to point out to you are names that were former leaders that are more concerning. And by getting into this, I'll be able to share with you some of the negative characteristics that are currently in place. This is Wayfair, super big winner out of this bear market. And we can see that it started to crumble, if you will, prior to that market peak. So that was your first sign that more downside ahead. So as the price began to break below these simple moving averages, once it broke below that 50-day, this was not one of the names from our list, but it's constructive and in line with what we would look for to remove or sell the stock, a break below that 50-day on big volume. And now we have a continued deterioration with these secondary signals. When the green 10-day crosses below the pink 21-day, that is a negative cross. And I'm sorry, it's a death cross, even more dramatic. And it does look poised to cross now below that 50-day. And we have a RSI that is very much in a downtrend, as is the MACD. I'm just going to pull up a weekly very quickly here for those of you that are longer term investors, because the weekly is still constructive. It is below that 50-day, but your other metrics, so it's really going to be a case of your time horizon, but super near term, it does appear poised for further downside. Let's take a look at Etsy, another big winner. This was a big winner for us with our MEM Edge report. Similarly, started to fall away from the markets prior to that peak in price. Same dynamics, breaking below the 50-day, your shorter term moving averages now in a declining mode, RSI, MACD, negative territory, so super near term looks heavy, more potential downside, and we are going to want to see all of these dynamics shift to turn bullish again on Etsy. SQ was another big winner, and we can take a quick look at that stock, as it is concerning and what you would not want to see as far as putting stocks. You can put them on your radar, but here's what I would want to see to turn bullish again. SQ did break down, and it is closing the week below that 50-day. However, your MACD is still in positive territory. Would like to see a break back above those shorter term simple moving averages to turn constructive on that. So let's go ahead and move on. I want to share with you some of these high yield stocks. Again, they can potentially be buffers if you are in these higher growth stocks that will eventually come back into favor. So this is Dow. DOW, of course, is the ticker symbol, and we can see the stock had broken out of this nice multi-month base last week, and it's continuing in an uptrend. The stock offers a 5.7% yield. It was upgraded today to a 55 price target. That's a nice 10% move. And then also earnings estimates for next year are 184% year-over-year growth. It's all about their product, the polypropylene, and high demand, high prices. Dow produces that. It's being used in autos, construction, two very high growth areas. So certainly keep that on your radar. Another company that is in the same area and same product is LYB. This is Lyodell Basel Industries, and this stock is poised to break out of a nice long base. It broke up above all of its simple moving averages, thereby reversing this recent downtrend. 5.8% yield, 60% growth forecasted for next week, and the company was just upgraded, major Wall Street firm, to overweight. Let's take a look at some of these other higher yielders, and these are surprisingly going to be in the REIT space. This is Public Storage, PSA, nice 3.5% yield, a little bit dicier than what I would normally be attracted to, but we can see it had this nice base breakout into a confirmed uptrend. Another storage stock or REIT stock in a similar uptrending position is EXR, Extra Space Storage. So they are seeing a pickup in demand, people that are in between homes, moving back home and storing their goods. So Another area that we can look at as far as a stock that is producing a nice yield, this is Fiat Chrysler, FCAU. And I didn't mention this today, but in that CPI, consumer price number, 40% of that pickup in consumer prices was due to used sales, and I'm sorry, used car sales that were really explosive. And this is something that transpired in the beginning of this lockdown and pandemic, but it is continuing to increase. So Fiat Chrysler, also this gap up, poised to break out of this nice base. They announced they actually released today 2 new 2021 models of their more popular Charger and Durango cars. 6.3% yield here, and we can see this nice black line poised to go up through the red. RSI is constructive. Another company a little bit smaller, but certainly bears taking a peek at. This is NTR, and they are the largest provider of potash. So we can see that this company, they did report their earnings back here. And we can see this was August 10th was their release date. Very good numbers, nice move up. And now it is confirming this downtrend reversal with today's 4% improvement here. This stock does yield a 4.7%. One other area or name that we can look at here is Genuine Parts, GPC. Nice confirmed uptrend, had this base breakout right here on big volume. The company 3.2% yielder, and came out with good numbers. Analysts are raising estimates. And then EMN, one other on these nice higher yielders. Take a look at this, because you can see relative to the broader markets, it's holding up remarkably well. Had that nice base breakout. Analysts are advising or raising estimates for next year. One last thing I want to point out to you is you can request what's called a full quote. Go ahead and update that, and that will provide you with the yield, 3.25% for this particular stock. One other area that I did want to share with you are some of these. I talked about stocks that you might say are newer to the party. I did review this in my 5 and 5 earlier in the week, which is one of the StockCharts shows. Actually, it's 5 in 10 minutes is what the premise is. Great show. And I talked about some of these turnaround candidates. This first one here is Abercrombie and Fitch. Lo and behold, it does have a 5.6% yield, but a couple of dynamics that bear looking at. The first is this gap up in price, big volume, and that was all about earnings. Also, the street was really impressed with their inventory management, and most of their stores are now open. And we can see the stock broke back above this 200-day simple moving average. That is very constructive as a way to reverse a downtrend, and then a nice continuation rally for that stock. Another one that we can take a quick look at here as we wind down the show. This is HPQ, and another company. It had a gap up out of this nice base on strong PC sales. The company was subsequently upgraded, and their pandemic PC sales pushed their numbers up by 1 billion. So it's not overly dynamic. It is finding support at this upward trending 10-day simple moving average. Has a nice 3.7% yield. And then one other name that we can take a quick look at here is PBH. Not as dynamic, but it did break back up above this 200-day simple moving average. They saw a pickup in digital sales to 87%. Demand for comfort and casual clothing is helping them. China and Europe, positive trends. So we could maybe see a nice continuation rally here. And I am going to leave it at that. There is a special offer. Use the link below. You can trial my MEM Edge report for 4 weeks for a very nominal fee. And by doing so, you are really going to be kept up to date with the markets. The report comes out twice a week, but last week I did put out extra reports as it related to the markets and stocks selection as well. Have a great weekend, everyone, and I will see you here next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.